The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Webner. Webner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." "No way. We need a star like Ryan O'Neal to play Rocky." Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 18th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call reverse the word evil, and you have the word live. You know, I love telling stories. I think there's so much that we can learn from story. Let's just even like the opening of today's show. Each opening of each show has a little bit of a different story. Now, you don't have to love Sylvester Stallone, but what you should do, and what we should do, is we should love the story. And there's so much story, and so reverse the word evil, and you have the word live. You know, and the answer that I say, the answer is yes, bad things can happen to good people. I'm sure you're a good person out there, and there's probably a few bad things that have happened to you. You know, Thursday's opening, I should say, of the Trader's Edge show. It's the shot that was heard around the world. I'm referring to the golf shot heard around the world when during the Masters tournament. When was it? 10 years ago plus now. Time flies so much. When Tiger Woods hit that memorable shot. You know, the one where the ball is rolling. It's got the Nike logo. Just pauses right before it drops into the hole. Tiger could sit out there. Anybody could sit out there and try and hit that shot time and time again and never make it. Now, to me, that whole story was not about Tiger Woods. It was really about Chris DeMarco, the guy that he was playing with. And it is all about, folks, you know, the answer is yes, bad things can happen to good people out there. Of course, it would only be fair that bad things would only happen to bad people, but that's just simply not the way that life works out. So instead, if something bad or evil happens to you, realize that perhaps the gift in that entire set of circumstances, the gift, folks, is that it will give you a new way to understand something. Maybe an inner growth moment might take place. That's what took place in the case of Chris DeMarco at the Masters tournament. Realize that the word evil is really just the word live spelled backwards. You know, I can remember the exact moment I can tell you, right now I can picture it. When an attorney of mine said to me, "Hey, Steve, bad things don't happen to good people." Well, I won't go into details about that event, but if I were to summarize it, I would tell you I had a contract with an individual. I more than fulfilled my responsibilities. That was not a question. There were unpaid services that were a significant dollar amount. Significant, mid-six figures out there. That's what it was worth to me. But then, in mediation, I heard those immortal words that a bad settlement is oftentimes better than a good lawsuit. And the reality was, when we took a look at all the case law that was out there, this thing could have dragged on for a while. We saw the exact same type of case law, almost an exact same type of situation. It wasn't about who was right or wrong. It was about the mere fact, do you want to go ahead and drag this out for the next 12 years in court? Folks, if I had not gone through that bad experience, I would likely not have ended up right here today, doing what it turns out to be, doing the thing that I love the most. Now, I've always loved doing the things that I do. It's why I live with passion. Look, here's the deal. We can't control the circumstances of life, only how we react to them. And what it seems is if you've been dealt an evil card, what I want you to remember is just simply reverse that thought, reverse that word evil, and turn it into the word live, because something that is evil can transcend a good person and propel them into an even better situation. So reverse that word evil, folks, and you have the word live. Well, let's go check out the evil and what's living in the markets. Right now, we've got Dow futures up 47 points. They're trading out at 16,214. S&P futures up 5 points. They're trading at 1855. NASDAQ futures up 8. Trading at 36.59. Russell 2000 up about 4, trading at 11.86. King Dollar up 4 pennies, trading out at 79.56. Goldilocks back $19 right now, trading out at 13.53. Silver off 2.5%, down 55 cents, trading out at $20.72. Light sweet crude is up 50 cents, trading out at 98.60. Our call-in number, you know it, 877-927-6648. If you give me a call, I'll be happy to field your question, take a look at your stock chart, answer whatever question it is that I can. A quick peek around the globe. We see here over in Germany, the DAX is up 58 points. It's up about 0.6%. FTSE not having the same party, up about 20 points. It's up 0.3%. Green arrows across the board in Asia last night, meaning taking a look at the Nikkei, the Hang Seng, and the Shanghai out there. Was the Nikkei that was leading the charge, up 133 points. It closed out at 14,411. So, where do we begin today? Let's look at the short-term chart. If you're watching us on TigerTV, and I hope that you are, even if you're listening on your radio or your mobile device at TFNN.mobi, remember you can catch the live stream of the show by going to the homepage, upper right-hand corner. You'll see that button, 3 smartphone devices. Click on that. The show will stream live to you. You'll be taking a look at the June contract, the ES Mini. You're looking at a 30-minute chart out here on my screen. The upper portion, it just shows you price. Actually, also, I've got this little automated counter. Shows you what the Chapman wave peaks and or troughs. In this case here, the peaks are out here. In the middle section, or the bottom, I shouldn't say really middle, because it's more like the lower quadrant is broken into 2 relative strength periods out here, one being the 14 period, another being the 3 period out here. And what you'll notice is, the way that this relative strength momentum index actually works, whatever the time period is that you're looking at, and find a time period that works for you. If you're looking to understand momentum inside a marketplace, it's like an elastic rubber band. It can only be stretched so far before it has to snap. Speaking of snap, was yesterday a snapback rally? Was yesterday an initiation? We know what we're going to find out by the end of today's trading session. Perhaps we're going to find out by the end of today's trading session. You can see here, if you take a look at the low that actually was put in, I'll go back to the 7 p.m. hour. This is on March the 16th. And if you take a look at that, the low here, that was Sunday evening, as the ES Mini was pushing lower, gets down to 1823.50. So it pushes down there. If you take a look at the red squiggly line on my chart out there, and if you'd like to see these charts in HD, folks, just go to the homepage at TFNN.com and sign up for the Tiger's Den. You can get these in HD. You'll see things very clearly out here. If you take a look at the relative strength indicator, the 14 period gets down to about 31, so that means it's approaching or in the oversold area. But if you take a look at that 3 period out there, the blue squiggly line on the bottom, you can see it gets down to a level of 3.96. Hey, it can only go to 0. It can't get to a minus area. And the way that rubber bands trade, if you go pay attention to this, it doesn't get down. When it gets down to that level, it doesn't stay there for very long. And so you had an ensuing bounce that took place in the market. No question about it. Yesterday, in fact, right now, if we take a look at it, the key number to be paying attention to, in my opinion, one of the key numbers is 1858.50. We saw the ES Mini. This is if I'll go ahead and blow this up. So the bounce that we saw that took place, there was going to be some kind of a bounce. You don't know where it's going to lead to. That's why what you always do, what I say you should always do, if you're trying to enter a trade or you're trying to understand where things might go to, the very first thing that you should visually look at on your chart is what? That's right, the first set of swing points that you're coming to. So where is it that you saw the most recent change in trend? And inside because then what's going to happen inside a market, it's going to move up to that level. That's where it makes that 100% move of a move. Usually moves sideways or something. And if you go back here on the left-hand side of the chart out here, you'll see the swing points here right around the time frame, about 10:30 in the morning or so on March the 14th. You could use the time period at 12 noon on March the 14th as well. And you can see his price was bouncing yesterday, even into, 5:30 in the morning out here. What did it do? It got up, made that 100% move of a move. You get above that area, which it did. In this case here, it did it with, a wide-ranging bar. That was coming into the 10 o'clock session. Yesterday's open from 9:30 to 10 o'clock. Wide-ranging bar. Markets do not end on wide-ranging bars out there. In fact, what you're looking for is a continuation move. You're looking for a signal of a continuation move out here, and we're going to talk about that in a moment. So what does that set up? It sets up, hey, moving to the next swing point out there. Well, where's the next swing point? That's pretty clear. That takes you all the way back here to the 10 o'clock session on March the 13th. That high is 1867.75, low is 1863. So what is likely to occur if, in fact, the ES Mini can crack that 1858.50 level? In fact, I fully expect we'll see a spike up to that area, and then we'll determine what is it going to do from there. Because if it can stay above 1858.50, that's very bullish. That's bullish for the bulls. Whereas if this level here acts as a resistance line, well, that may be the extent of the move. Now, another thing that you can certainly use, are the retracement rulers out here. And if we go take a look at retracements from the high, inside the ES Mini on the 30-minute chart, we're using a 9 a.m. time frame. That's on March the 7th, down to the low that was put in Sunday evening out here. What you'll also see just happens to be at 1858.75, happens to be the 0.618 retracement. So you've come into the 0.618 retracement level with a wide-ranging bar out there. Markets don't end on wide-ranging bars. At least they typically do not end on wide-ranging bars. There's never a 100% guarantee of anything inside any market out here. What does that say when you come into that area? It says, hey, you're likely going to go up to the 0.786 level. That's 1868. Happens to also be the next set of swing points out here. Again, that one being the 10 a.m. session on March the 13th. So that's what you're doing when you're taking a look at, hey, where is price trying to elevate itself to, or where is it trying to go to the downside? Now, take a look at this wide-ranging bar that came in. We don't really care what the reason was. We just want to know what traders are doing out here. Wide-ranging bar. Right now we've seen 3 small-bodied candles out here. Anytime on a 30-minute basis here in the next hour and a half, I should say. Well, hour and we'll call it 11 minutes. If you were going to use true to form here, the rising 3, the Japanese candlestick rising 3 is any close, quite frankly, on a 30-minute chart above 1849.75, that is a continuation pattern. Continue to wear. Well, I'd have to say it has to continue up to at least that swing point out at that 1867 mark. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Dow Futures up 42, S&P still up 4. You know, we start off the morning usually taking a look at the intraday charts out there just to get a feel for what is going on in the marketplace. Let's stay with the S&P futures here for a few minutes. Let's do this. Let's go deep. Let's go deep into the bullpen here. Let's go take a look at the monthly charts. Let's go monthly, weekly, daily, just to try to get a feel for what's going on. So if you're watching us on Tiger TV, I've got the monthly chart up on my screen. You're seeing horizontal lines going across there. You know, I've built a little tool here. Just taking some of the tools that, for example, that Bud Rolfs taught us about, primary trading range boundary lines out there. You know, for me, it was too difficult to sit there and try to figure out where the largest number of co-located opens and closes are. Meaning, we're taking a look at and what I like about that is, I never talked to Bud about how he decided on using the body of the candle versus the wick of the candle. But it fits completely with regard to Japanese candlestick chart, and maybe that's where he also also came to, and that is really the body of the candle, meaning the open or the close of the candle, not the wick, not the shadow, whatever it is you're going to use as your terminology for that, because that's just nothing more than the extreme emotion of that trading session. Right now we're looking at monthly trading sessions out there. So it's really the body of the candles that are out there, and use either an open or a close when you're looking for primary trading range boundaries. Now, usually you round it up here, but the way that my system calculates it, it takes a look at any chart on a page, goes out and identifies the largest number, the first largest number area of co-located opens and closes. In this case here, then it identifies it. I put in a dark line, in this case here, about the 1277.59. So we call it 1275 is probably a good number to use out there. And then it identifies the next highest level above or below, and it goes ahead and spaces those out to determine primary trading range areas where price typically travels within. Now, what we can see here right now as we go ahead and we expand up to where we're at on a monthly basis. On a monthly basis, the S&P futures, they've broken through the next primary trading range boundary out here. Last month, it tested the 17, we're going to call it the 1800. 1794.51 is the number that shows up on my screen out here. But let's just call it 1800 out here. You've got 1966, we'll call it 1975. Is really the top of the next trading range line. You can see it's hit that, what Bud likes to call that mid-PTR ice level at 1881-ish range out here. But if we take a look at just simply candlesticks, you're not going to see any reversal here as of yet. The reversal that was available in the marketplace was the month of January, where you did have a bear sash candle out there, but the bears just simply lost control of the market on a monthly time frame. Again, that's what we're looking for, so we do not see. Now, what would you need to have a monthly reversal? For the month of March, and we're already at the 18th, you need to see on a monthly basis for a longer-term potential change in trend. You would certainly see the need to see, how about that? How about you would need to see a close below 1777.50 out there. So that's what the monthly chart is showing us. If I go ahead and I put the relative strength indicator up here, what we are going to see is that at this stage, we do have price moving to a higher high on less relative strength out here, but there aren't enough candles that have formed in order to really form that beautiful price relative strength divergent pattern that we look for significant turns out here. I'm going to go ahead and delete that. Now let's go take a look at what is a weekly chart for the ES Mini showing on here for us. So I've got the retracement calculator on here. Let me do this. Let me get rid of that for a moment. This also has, so the weekly, has also a different set of primary trading range numbers out here, but let's not focus on that. What we can take a look at is the potential of an A to B equals CD to the upside out here, and that would be using as a point the October 11th, week of October 11th down at 1640, the high out here of January 3rd, that high being 1846.50. Volume there was 3.1 billion. Contracts, and it got over it with 7.5 billion, and that was the month of that was the week of February 28th out here. So you have a confirmed A to B equals CD to the upside inside the weekly chart for the ES Mini. Now, had a bearish reversal signal last week. We had a bearish engulfing, bear sash candle out here. And you can see this week it is really trying to take that on. Look, folks, it says resistance is 1887.50. If, in fact, the market can get above 1887.50, tells us it wants to travel to at least the 1940 to 1994 range out there, one thing at a time. So we do have a bearish reversal signal here on the ES Mini, on the weekly chart. That says to us where resistance is. What we'll also find, if I put that relative strength indicator up here, yeah, it's close to a price relative strength divergent pattern out here. I'd say that it actually is one. It actually qualifies, but just by the hair on my chinny chin chin. 877-927-6648. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 29 points, trade out at 16,275. S&P up 3, trade at 1861. Composite up 7 points, trade at 4286. Russell 2000 up $1.60. It's trade out at 1189. Apple's flat. Microsoft up 49 cents. Google up 247. Leading the charge to the upside, it's Tesla up $4.30, trading out at 238 and change. Amazon up $3, trading at about 378. Future Fuel Corp up 19% this morning. Double F is the ticker symbol. Maybe we'll check in on that. Chicago Bridge, CBI is a ticker symbol. They're up about 2.5%, up $2 and change out here. To the downside, let's see, you got the junior miners, you got the major miners. Shutterfly, SFLY, that's off 6%, down $2.96. GameStop, GME, off about $5, down $2. Michael Kors, KORS, down about $1.90 out here. Hey, I think I said billion when I meant million out there when we were taking a look at the weekly chart of the ES Mini. My apologies. I must have been thinking McDonald's, billion served or what have you. In any event, on the weekly chart out here on the ES Mini, we do have a confirmed A to B equals CD to the upside. It's got to take out that resistance of last week. It is turnaround Tuesday. We're going to see, is the market going to turn around and head south, or is it going to continue its turnaround from yesterday and continue to move north out here? In any event, looking at different time frames now, let's go take a look at the daily time frame. Let's go ahead and finish this off since we looked at the 30, we looked at the monthly, now we're taking a look at the daily. I mean, just looked at the weekly. So what did we see here yesterday? Number one, now, this is the continuous contract, so there's adjustments, mathematical adjustments in changing over from one quarterly contract to the next. What we can say here and take a look at the continuous contract is this. Number one, the ES Mini has been traveling in a 112-point consolidation range out here for a good long time. You might remember the consolidation range that the Dow had been traveling in, and it finally broke out of. Now, these are important. Consolidation ranges are important because if, in fact, price can't hold this level, it gives you the signal that if it can't bust it up, it'll try to go bust it down. In the case of a consolidation, that says, okay, your downside opportunity, risk, however you want to take a look at it, is about 1732 out here. What we saw take place last week, this is a daily chart out here, so we saw it take place on Friday, was we saw a move lower. Now, part of that was primarily a result of switching over to the new contract. But yesterday's action, unquestionably strong when you take a look at price, when you take a look at price spread. I mean, in the ES Mini went from 1823 to 1855. 32 points, basically. That's a big day. That's not what it showed up in the charts on the, if you took a look at where the S&P finished up. But a big day out here. Big candle, bullish engulfing candle. It says the bulls are certainly defending that area, 1823.50. That's where your support is. If you take a look at just simply retracements, and you're outside of the consolidation, so it's gone ahead and it's rejected that. It does say if we're going to see a move higher, if yesterday was an initiation move, the weekly chart says, hey, it was, really. If you take a look at the A to B equals CD to the upside out here. The monthly's not showing any kinds of a signal. Of course, your changes are your change in trends are going to take place where? On a shorter term time frame first. That's why we take a look at a 30-minute chart. The other chart we can look at is a 120-minute chart as well. So you can take a look at 30, 120, then daily, weekly, monthly, just to get an overall feel for the signal out here. Now, yesterday's move on a daily chart out here, because it just simply sliced through the 0.382, it really does suggest moving to 1863 out here. That's your 0.618 retracement. That's just simply coming off the swing point high on the daily basis from March 7th down to the low of yesterday, Sunday evening, really. So 1863 would be your 0.618 retracement. So far, we've seen 1859.50. I would expect, since you're really into this downdraft bar out here, we'll see what kind of strength. If there's any kind of strength here, based on what we took a look at on a weekly chart, if there's any kind of real strength out here in a daily chart, you ought to see the 0.786 area get tagged, 1873.80. Because the question is, if we continue to see a light volume move out here, and then we see a reversal, is the ES Mini really setting up, is the market really setting up a to B equals CD, meaning that right now you're just simply in the light volume bounce here of the B to the C leg out here. So those price points to be watching, 1863, 1873 would be the numbers out here. So that's, taking a look at the ES Mini and really, trying to put it all in perspective with regard to time frames out there, which is very important because for those of you that are listening in, which is many, that are, and thank you for doing that are managing your long-term accounts, you really don't give a hoot about what's going on a 30-minute chart out there, nor do you really give a hoot about what's going on the 120-minute chart. Where your feathers need to get ruffled is probably on the weekly charts. Take a look at the weekly and the monthly, and using maybe a daily as a change in trend signal for you out there. In any event, I give a hoot about all of you guys, so I've got to take a look at all of the different time frames. Now, that's the S&P futures futures that we were taking a look at. I'll do the same thing here. Whether it's this hour or next hour, take a look at the euro, Japanese yen, because I think that's important. I think that's about as important as anything out there, because that's your gauge, that's your liquidity. That's one of your liquidity gauges for the market. And so you want to understand what's going on multiple time frames for that currency pair. You can think about all of the fundamental reasons why currencies should be doing what they're doing or what have you. For me, it's really the most fundamental thing is, what are the chart patterns telling us? That's what it is that we want to try to nail down here to help us with our trading out there so that we can truly master probability. Now, let's go take a look at some of these stocks here that are popping and dropping. Let's go see what we've got behind some of these stocks here. So you've got now Google's in the lead to the upside, LinkedIn, Tesla, Future Fuel, FS is the double F is the ticker symbol. So I want to take a look at that. I'm assuming they might have something to do with oil and gas or natural gas. Let's see. They engage in manufacture, sale of diversified chemicals, biofuels, and bio-based specialty chemicals in the United States. Well, let's go see what they're doing. Again, ticker symbol here, double F, French fries. See, I was thinking billion, and what had happened? It brought that up, because if you're thinking McDonald's, which I don't think of McDonald's too often, but if I were to think of McDonald's, wouldn't it be the French fries, really? Isn't that really the whole key to McDonald's out there? I mean, does anybody make much, when it comes to fast food, you don't make much better in the way of French fries. At least I don't think that you do. In any event, let's go I digress, don't I? Let's take a look here at Future Fuel, which is just confirmed in A to B equals CD to the upside, taking out a B point with volume. October 21st is the swing point on the daily chart. The high there is 1909. It's trading at 2098. Volume there, 121,000 shares. Not the most liquid of instruments. Already done 500,000 shares out there. So the 1-to-1 A to B equals CD that we're looking at least the small one out here, would take you up to, looks like a price level of, what's that magic number? Your 1-to-1 takes you to 22.16. When you move into a D point like that, it really says you want higher price. So I figure about $24.16 for FF, French Fry Future Fuel Corporation. Yep, everybody in this equity here is having a good time, because if we pull this back, you can see it's at all-time highs out there. So not too shabby for Future Fuel. Let's go take a look at Shutterfly. That's the opposite side of the story. They're leading the charge. The downside, they're off $3.40, down 6% out here. SFLY is the ticker symbol out here. Gapping down. Let's go ahead and we'll clean up this chart. We'll start from scratch, see what it is doing out here. Looks like in a bit of a downtrend. There we go. Okay, we're clean. So now, where this is probably headed to is this breakout session that it had. Whether it's the low of the breakout session, meaning the February 6th candle, which is a price of $37.76, or all the way down to fill that gap to the breakout, and that would take you into a price range of somewhere around $34 to maybe $32.03 out there. Let's take a look at what it is doing here this morning. Let me see if they're out with numbers. Looks like they are. No, that was Future. That was Future. They're out with numbers. So just as long as I'm over here, what did they do? Future Fuel. They did 125.6 million. Come on, show up on my screen here. 125.6 versus 74 million. So they're knocking out of the ballpark when it comes to their top line. Bottom line, they really knocked it out of the park out here. They did almost a 400% increase. They did 26 million versus 6.2. So no wonder Future. We might have to take a look at Future Fuel out here for a future trade. In any event, back to Shutterfly SFLY daily chart that we're taking a look at here, gapping down here this morning. So and it's trading into this little high volume, most recent high volume swing point low, which was from the trading session of February the 6th out there. So you got 6 million shares. It's tested the top of it. It's rejected it. Should go at least all the way down and test the bottom of that area, 42, 43. Now, if it takes that out, that's when it will go ahead and it should move all the way back down into that original breakout area. And that is on Shutterfly. And Shutterfly out there, most of you have probably, maybe you've used their services, their personalized product services, for photo-based type of products out there. In my olden days, I used to compete with them to a certain extent. when I provided all of the drugstores, CVS, Walgreens, Rite Aid. Who else was it out there? The chain up, Myers Thrifty Acres. Of course, it's just called Myers, I believe, up in the Detroit area out there. And I had provided their photo counters with all of their photo gifts, canvas things, T-shirts, mugs, crystals, and so forth. In any event, you're not interested in that. Let's go take a look at some additional things here that are moving and grooving. Let's take a look at Digital Realty. DLR is the ticker symbol. Let's go see what it is doing. It's trading down here this morning, about 4.5% down 250. Let's go see what it is trying to do out here. So this is a decided downtrend for sure. Looks like we've looked at this at one point in time out here. This thing here has a... It's down today with a volume of 388,000 shares out here. Looks to me like this wants to move all the way back down to this hammerish type candle from the trading session of December the 3rd out here. So it looks like DLR, Digital Realty, looks like it wants to make a move down to about the $43, maybe to $44.99. Let's go take a look at, see a couple of stocks that are moving to the upside. Let's take a look at LinkedIn. Let me see if I can find that here on my charts, because LinkedIn has been traveling in a descending price channel out here. So I want to see if we can find that so I don't have to redo my work out here. It's not on that. Here's the one last tab where it could be in this little earnings tab out here. So give me one more moment to do that. And if we don't see it, we don't see it. Looks like Stevie's got to do some work. So we're going to take a look at LinkedIn. LNKD is the ticker symbol. It's up about one. There we go. What day? How about that? It showed up on the chart out here. In any event, you can see the decided, and this is, a nice, pretty nice looking stock chart out here. The only time we really saw what you'd have to consider, you've seen some slight signs of institutional selling. Looks like they began right back here. Yeah, right back here. The first time we saw it was on October the 8th. You saw October the 8th, by the way, of 2013. You then saw some additional institutional selling on October the 30th. You saw it again on December 18th. The most recent time that we saw it was, it didn't really do too much here, was on February 7th. Now, the reason I want to take a look at LinkedIn, because of this nice descending price channel, would be if it breaks to the upside here. Much in the case of gold, how it has broken through its descending price channel on a longer-term basis. This one just is really taking us back, in essence, into the highs that were formed back in September 2013. But you can see a nice little descending price channel that LinkedIn is traveling into, and I would not be taking a look at getting into. Well, two ways you can take a look at trading this. You can trade it from the bottom of the descending price channel out here and try to take a trade and let it bounce all the way up to the top, or you can wait for a breakout for a longer term trade if it ever does break through this descending price channel. In any event, enough descending price channel stuff. Let's take a look at let's see, what do we have moving up of any significance percentage-wise out here. We've got you've got VNet, 21 VNet Group. That's up 8% this morning. Let's go take a look at this stock chart. Switch over to another tab, and then we'll go take a look at the currency market, see what we have going on there. We'll take a look at gold and silver. I'm sure some of you want to know what's going on there, so we'll take a look at those. VNET is the ticker symbol. It's up 8% here this morning. Let's go take a look at the volume. Looks like it's taking out a swing point. Is this all-time highs? Yeah, it most certainly is. So you've got, let's see, what do they do here? VNet Group, 21 VNet. They're either a blackjack company, or they provide internet data center services in the People's Republic of China. Okay, so you got China, moving towards lower ground, and you got some of these Chinese stocks here moving to higher ground. In this case, VNet is taking out a swing point from the trading session of March 5th that had a volume of 1.4 million shares out there. And as we take a look at it, it is up over that area with a total of 290,000 shares here. So should have the volume today to take that swing point out. That would set up your next A to B equals CD to the upside. The small one inside of VNet takes us to a price projection. The magic number is, drum roll please, Johnny. That would be $33.73 out there, maybe $36.19 depending on the volume. In any event, as a stock chart goes, it's not a bad-looking stock chart at all, at all-time highs. So the folks at 21 VNet Group are having a good party. Question is, Have you joined that party as well? Dow's up 52, S&P up 7. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Back Dow's Dow's up 64 points. S&P up about 8. Composite up 22 points right now. And just to go back to where we left off here earlier, we're seeing the classic. Now, we've got 6 minutes left in the trading session. So, a lot can happen in 6 minutes in any market. If we've got the ES Mini 30-minute chart back up on the screen where we started our day, and a classic rising 3. Most candle signals are reversal candle signals. When I say most, there's the candle signals that you should be paying attention to are reversal candles. There's a lot of candles out there that, quite frankly, are hogwash. They don't mean a whole lot out there. In fact, they might get you confused. So that's the problem with reading some of the material that is out there. They really don't teach you how to trade that. Certainly, that's what I do. I've got some great workshops. If you're interested in checking those out, you can send me an email, steve@tfnn.com. I'll get you on the right track. There are a couple of candles that you can use that are continuation patterns, and one of those is that rising 3. I touched on that briefly this morning here. It is this is a textbook one. If we see, in fact, a close, really, the conservative traders would say, I want to see a close above the high of that 8 a.m. session, which is 1859.50. More aggressive traders are just simply looking for price to get above, and this is where you would take an aggressive position, get above the close of that session, which was at 1857.50 or at 1859.75 right now. Still 5 minutes left in the trading session, so anything can happen on a turnaround Tuesday out here. But nonetheless, nice wide-ranging bar here. Then in this case here, you only had 3 candles. It usually forms within 5 to 6 candles out here. And 3 small-bodied candles and move, an up thrust there. Now, don't get too overly anxious out here because with regard to retracement level, the next level where price ought to move to before it starts to move sideways is, in essence, that 100% move of a move. That's really up in about the 1867 level. But for an intraday trader out here, you certainly want to make sure that you are familiar with these types of patterns out there. So that's what's going on there. I did mention we would take a look at Goldilocks and silver, so let's do that here in the next 2 minutes. If we take a look at silver here specifically, I know silver broke through, but just for one day, so that was a one-hit wonder at this stage where it broke through that longer-term descending price channel. That's the red diagonal line coming across the top of my screen out here. Breaks above that area yesterday, breaks back inside there. Darla looks like a bearish engulfing candle as well is what it formed, and then today decidedly in there. Now, what should silver do here? First, it has found some support at that red squiggly line. That's your 50-day exponential moving average. Right now, that is priced out at $20.77. You are trading at $20.77. So we've seen a spike of that level. The 50-day has been tested before, back on March 10th as well as March the 11th, being tested again here today. It closed below that. Says that price ought to, in the preferred place of entry is right around the $20.50 area. That is the top of this consolidation box. Whether it's 2047 to 2050 to 20, somewhere in that range is likely one of your potential spots to take an entry. Now, where it gets really complicated is if, in fact, you see it close below that level and price were to dip back inside of the consolidation. But I suspect that it will hold, or maybe a spike down about $20.19, your 0.618 retracement from the low to the high that was put in on silver, and that was on February 24th. If we take a look at gold here, what did gold do yesterday? Gold did fulfill that objective, unfortunately, of creating a key reversal session. We talked about that yesterday. Key reversal and bearish engulfing. Now we'll see Goldilocks pull back to the 200-day exponential moving average, 1331. It is Terrific Tuesday, folks. Thanks so much for joining us. If you're off to start your day, have a terrific Tuesday, and I look forward to seeing you on Wonderful Wednesday. Take care, folks.
Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.